What is VTI? VTI stands for Vanguard Total Stock Market Index Fund. It is an exchange-traded fund, otherwise known as ETF, offered by Vanguard, one of the world's largest investment management companies. VTI aims to track the performance of the CRSP U.S. Total Market Index, which represents the broad U.S. equity market. The fund provides investors with exposure to a diversified portfolio of stocks across various sectors and market capitalization, including large cap, mid cap, small cap, and micro cap companies. In simpler terms, it's a fund that invests in a wide range of U.S. stocks, allowing investors to participate in the overall growth of the U.S. stock market. VTI is designed to provide investors with a broad market exposure and is often used as a core holding in long-term investment portfolios. It offers a low-cost and an efficient way to invest in a wide range of U.S. stocks, allowing investors to participate in the overall growth of the U.S. stock market. By investing in VTI, you're essentially gaining exposure to thousands of companies across various sectors, giving you diversification and reducing the risk associated with investing in only individual stocks. VTI uses a market cap weighing methodology, which means that the weight of each individual stock in the index is determined by its market capitalization. Larger companies have a greater impact on the fund's performance due to their higher market capitalizations. VTI provides investors with exposure to the entire U.S. stock market. This broad market exposure can help capture the overall growth potential of the U.S. economy. The diversification helps spread risk across different sectors and reduces the impact of any individual company's performance on the overall fund. Diversification can enhance the stability of returns over time. It follows a passive income strategy, meaning it aims to replicate the index rather than actively selecting stocks. VTI has a total of 3,898 companies from the United States that are in the CRSP U.S. Total Market Index. The top 10 holdings of VTI take up 23.64% of the fund's assets. The 10 largest holdings of companies in VTI include Apple, which makes up 6.25% of the fund, Microsoft, making up 5.61% of the fund, Amazon, which makes up 2.25%, Nvidia, which makes up 1.59%, Alphabet Class A Google, which is the parent company of Google, makes up 1.57%, Berkshire Hathaway making up 1.41%, Alphabet Class C Google making up 1.34%, Meta Platforms making up 1.31%, ExxonMobil Corporation, which makes up 1.18%, and the 10th biggest company in VTI is the United Health Group, making up 1.13% of the fund. VTI is made up of stocks from many different sectors in the market. It's made up of 11 different sectors. These sectors include communication services, consumer cyclical, consumer defensive, energy, financial services, healthcare, industrials, real estate, technology. Basic materials makes up 2.5% of the companies in the fund. Communication services provides 7.61%. Consumer clinical provides 10.39%. Consumer defensive provides 6.73%. The energy sector provides 4.58%. The financial services sector provides 12.79%. The healthcare industry provides 14.44%. The industrial industry provides 9.34%. Real estate makes up 3.29%. Technology, which is the biggest out of all the sectors in the VTI, makes up a quarter of it at 25.46%. And utilities makes up 2.81% of the fund. Since the largest sector of the index fund is technology, this is because technology companies are some of the largest and most profitable companies in the U.S. market. VTI also pays dividends to its investors. Dividends are a portion of a company's profits that are distributed to its shareholders. At the time of this video, VTI currently pays a dividend of 1.55% as an index fund. It holds a portfolio of stocks, and any dividends paid by the underlying companies are passed through the fund's investors. Dividend payments from VTI can provide investors with a stream of passive income. This can be particularly attractive for income-oriented investors who rely on dividends to supplement their cash flow needs or to reinvest the dividends for compounded growth. VTI typically distributes dividends to its investors on a quarterly basis. Another key feature that VTI provides is its low cost structure. VTI is known for its low expense ratio, which is the annual fee charged to investors. Vanguard, the fund provider, has a history of offering cost-effective investment options. The low-cost structure of VTI can be advantage for long-term investors, as lower fees can potentially enhance investment returns over time. Vanguard is known for its commitment to provide providing investors with cost-effective investment options, and VTI is no exception. VTI offers a cost-effective way to invest in the entire US stock market. The expense ratio of VTI is 0.03%. That means for every $1,000 you invest, your expense would be 30 cents for that $1,000. Being that VTI is an index funds, that means for the best possible results from your investment, you would want to hold long term. Over the last 30 years, the Vanguard Total Market ETF obtained a 9.79% compound annual return. Now, that does not mean that you will get that return every year, as it's the average for each year over that time. That 9.79% could be lower or higher depending on the year. By holding for the long term, investors have the opportunity to benefit from capital appreciation as the value of their investments increases. While there may be short-term market fluctuations, the overall trajectory tends to be positive. Historically, the stock market has shown a general upward trend over the long term. Long-term investing allows for the power of compounding to come into play. As an investor earns returns on their initial investment, those returns can be reinvested and generate additional income over time. Compounding can significantly boost investment growth, especially when compounded returns are reinvested over several years or decades. Also, the stock market is subject to short-term volatility. This can be driven by various factors such as economic events, market sentiment, or company-specific news. When investors hold their stock, they have more time to ride out these fluctuations and potentially benefit from the market's overall upward trajectory. Long-term investing also overcomes market timing challenges. Successfully timing the market is essentially impossible. Trying to predict short-term market movements and opportunistic buying or selling stocks can be extremely risky. Long-term investing reduces the reliance on timing the market and instead focuses on the potential growth or the overall market and the underlying companies. This would makes VTI a suitable option for retirement accounts, such as individual retirement accounts, IRAs, or employer-sponsored retirement plans like 401ks. The fund's broad market exposure and low expenses make it a popular choice for long-term retirement investing. Investing in VTI is not an automatic guarantee for you to make money, as with every investment, it does come with risks. Since VTI is an index fund, it comes with less risk as an individual stock would. Since VTI is an index fund, it comes with less risk than an individual stock would, but there still are risks that can be associated with investing in VTI. One risk is that VTI invests in the stock market, which is inherently subject to market risk. The value of the fund can fluctuate due to broader market conditions, economic factors, geopolitical events, and investor sentiment. Market downturns can result in temporary declines in the value of your investment. Another risk is volatility. Stock markets can experience significant price volatility, and this volatility can impact the value of VTI. Rapid price movements can occur in response to various factors such as company news, economic indicators, and market trends. Investors with a low tolerance for volatility may find it challenging to handle the short-term ups and downs. While VTI provides a broad market exposure, it does not eliminate the risk associated with individual stocks or sectors. The performance of VTI is influenced by underlying companies held within the fund. If a specific sector or group of stocks performs poorly, it may impact the overall performance of VTI. A rise of interest rates is bad for stocks. Changes in interest rates can affect the performance of stocks and bonds held by VTI. When interest rates rise, it can lead to a decline in the value of fixed income securities, impacting the fund's performance. On the other hand, declining interest rates may benefit the bond portion of the fund, but can affect the equity portion differently. The last risk associated with VTI is inflation. Inflation erodes the purchasing power of money over time. While VTI is designed to provide a long-term growth potential, there is a risk that the returns may not keep pace with inflation. Inflation can impact the value of both the underlying stocks and the returns generated by the fund. If you would want to know more about VTI, Vanguard provides comprehensive information about VTI, including its holdings, performance, dividend history, expense ratios, and other relevant details. These can be accessed through Vanguard's official website or other reliable financial sources. I will leave a link to Vanguard's website in the description below for VTI. Thanks for watching. If you enjoyed or found this video helpful, please be sure to like and subscribe.